Morning, morning. Looks like I might be the only one right now. I think George. Yeah, absolutely. Welcome. Good morning. What a aftershock of what happened yesterday in the market. Clearly, volatility is back and play in the market. Where kind of myself and Jordan, I think a lot of other people were underwriting that towards the end of the year is going to be, I don't know, trend setting. Second half of December is typically light in volume, minimal volatility. Nothing really was going to come out and play to buck this trend we're in. Clearly, that was not the case yesterday. I think the biggest shock wave that occurred from Powell's conference yesterday was the higher for longer interest rate environment that they're anticipating in 2025 and 2026. Right now, I was underwriting maybe a 100 basis cut in 2025. That is not the case at all. I think it's slowly looking like 50 next year and then 50 again in 2026. That is a completely different scenario than what I was underwriting. I think a lot of like the market was underwriting as well, where I think everyone's front running a hawkish tone from Powell, but really that was not just hawkish, that was uber hawkish, and I think that caught a lot of people off guard, and that caused the dollar to spike, and it caused a 10-year yield to spike, and that created fear in the market because a lot of the positioning wasn't for that aggressive hawkish tone. It was everyone was thinking it was going to be somewhat like a little sprinkle of hawkish, but that was full on hawkish mode. Powell wanted to be in full Grinch mode entering that press conference, and I think that's people when people are saying like, "Oh, it's not that big of a deal." Like GDP is strong, everything is going. The labor market is like still showing somewhat of strength. Jobless claims isn't spiking as much, but the real read through is if the dollar continues to spike because of higher for longer interest rate environment next year, that's going to be highly impactful for a lot of companies who are in multinational corporations because they're going to be earning less money due to the currency headwinds of a strong dollar. And I think a lot of guides for next, like once earnings cycle begins next quarter, I think a lot of the guides are going to be impacted due to that strengthened dollar going to be causing some kind of FX headwind. And that's what I think the market's kind of repricing a bit. And that's why you're seeing small mid cap growth specifically just get punished yesterday. Like a lot of the software names, small caps like IonQ, Rocket Lab, a lot of these like early secular growth themed small cap names were getting severely punished because 10-year yield spiking to 4.5%, dollar strengthening, that is a no bueno situation for everyone, but especially the ones who are in that growth environment, and that's a small mid cap growth. So I think today we're seeing somewhat of a dead count bounce. I think GDP, we had some macro data this morning that was like pretty strong. So I think we're seeing somewhat of a dead cat bounce, but I do want to caution that when the market's up this much pre-market on a heavy selling type of day, I don't like that. I think usually that fades because there isn't enough juice to kind of participate after the pre-market move, and we
I'm
might
with
be
you.
in
I'm not
we
doing anything until we
yeah.
see yesterday's
Oh, Jordan, you're
lows for
back. I
me.
didn't see you.
I'm back. No,
Perfect.
you're good. I was just letting you riff because you were talking about some great stuff. I just had some difficulties like I usually do in the morning. But I'm back. Yeah, what a day yesterday, man. I wasn't even around for the actual move down, but just insane. Insane moves down. That I think NQ dropped like 1,000 points, and it wasn't even all day. It was the last 2 hours, which is just it's crazy. VIX over 20, which I've been waiting for this, right? This is going to bring us some great day trading opportunities, in my opinion, and of course, like more opportunity for investing as well and getting swing trades on. So I'm excited about this dip. Everything about that, like I'm very happy with. I know a lot of people may have gotten screwed over yesterday with that type of move, but that's a blessing, really. That move. I made my money beforehand. I said I'm out, everybody enjoy FOMC and the volatility. And I signed off. I was very happy with that decision because I probably would have lost money yesterday, to be completely honest with you, if I was trying to trade that. So I'm happy with that decision. Crazy day. I wouldn't have even caught the move down anyway. Looking at it right now, on like in hindsight, I really didn't have a setup for it. So that, for me, it's like it doesn't matter if we go 100 points, 1,000 points. If there's no setup, I'm not going to trade it. And that was just crazy movement. You know what I mean? And there's going to be more moves right around the corner. So I'm not worried about missing any of that. I know a lot of people might feel some FOMO from missing that type of a move, but you shouldn't feel that. In my opinion, that would have been a hard move to see from far away. And even if you did get a piece of it, you were taking massive amounts of risk for the most part, like trying to trade that, right? Which is okay. Everybody can make that decision, but that was a risky trade no matter what yesterday. So
I mean,
I wouldn't feel left out.
the beauty of it, like we started the show a month ago, and you guys saw the process for myself on how I have a highly risk on portfolio. I have a small cap portfolio and a growth portfolio. Both are heavily vulnerable to any kind of macro driven sell off. And you saw my thought process on how I'm going to hedge my year to date gains. And the way I did it was literally right in front of your eyes on the stream. I bought June expiration puts on the SPY Qs and Qs mainly because VIX was a 12 handle, 13 handle. Jordan and I talked about multiple times how that is undervalued. That's cheap. So hedging is really cheap right now. I don't know when volatility is going to return to the market, but I really do think it's going to return in Q1 of 2025. It happened yesterday, apparently. But I was able to lock in those contracts at such a cheap rate due to the VIX being at 12 or 13 handle that even the expiration was in June, I was able to my options went up 75% because the VIX exploded and nearly tripled. And now the hedging became super expensive. And now those contracts that everyone wanted, once there was fear in the market, people were willing to pay up that premium. And I was benefiting off that because I got it when nobody else wanted it.
Mm-hmm.
That's kind of when you want to hedge. Not when there's
And you
clear
still have
blood
plenty
in
of
the water.
time just in case, you weren't
Exactly.
sitting losing value on your contracts, you had plenty
There's
of
no
time
time
on that.
decay. Yeah,
Yeah.
there's none. It was just like I'm just sitting chilling. I trimmed half of it. I probably should have trimmed more than the half because VIX going up 74% is abnormal events. But I do think like that's when you're supposed to hedge, like when there isn't blood in the water, that you're just preparing for potential blood in the water. But when you see blood in the water, that's not when you hedge because that's when you lose money, in my opinion, because you're overpaying a premium on a contract when it's kind of obvious there's fear in the market. So you want to get ahead of it. Don't participate in the FOMO. Like I would not participate in hedges right now when the SPY's above their 21-week EMA and the VIX is at 27. That's not when you hedge at all. So I don't even know what the VIX is at right now. It's probably I don't know down 30% is my guess or 25.
We're
But
at 21.25, so
yeah, it went down 20%. The
God, we
VIX.
hit
So like
28.30 yesterday. Oh wow,
that's when it
didn't realize.
spiked. So
Yeah, we really spiked.
I think again like I should have probably bought some SVIX yesterday, knowing that like this spike of 74%, like that's abnormal activity that I want to short the VIX, and SVIX is up 8% pre-market. So like that's kind of like you could be you can like be a trader during these events, and that's why volatility is so much fun as a trader because that's when you really make the money, like up and down.
It's
When it's
fast.
like yeah, when it's stuck in mud, like there's not much you can do, and time decay destroys you, and like there's a lot of offsides. But when there's volatility, and you get that right move right, it's explosive.
100%. Well, let's move on to the daily rip. Get on with the morning. Just recap from yesterday, even though we've kind of been recapping the FOMC moves. But look at that heat map. Oh my God!
It
just
looks Santa theme.
Oh
For
yeah,
sure.
Santa theme. Hey, UNH, CI, CVS, screen, healthcare still hanging on. So like to see that. But geez, just ruthless, just blood everywhere in the water. Tesla down almost 8.5%. Everything just getting cooked. So, but again, I mean, I love to see this. I know a lot of people might not like it, right? But markets ripped all year, and when you look at this from a higher time frame standpoint, like nothing really happened. This is a normal dip, but obviously intraday. That's tough to sit through and swallow, right? Especially as a long-term investor, and that's why you got to be like Shy, right? With these hedges on, he's happy about it. He's like, I don't care. I got my positions on, I got my hedges on, and I'm taking profits, and I'm happy about it, right? So, and I love the exit on Nvidia you took, by the way, as well. I thought that was great, coming like into FOMC here just to limit that risk, because again, you're always gonna have another opportunity to pick that back up. So I love seeing you take profits on that. I think that was a great move. And we've seen Nvidia kind of be the leader of this move down, and now we're like, it was the first one to bounce yesterday, right? It's like it's still the leader, and again, I've talked about it a little bit before. It's battleships in the ocean. You know what I mean? Nvidia's the leader. When Nvidia turns around, it's not all going to turn around with it right away, right at once, right? It's going to take a little bit of time, and we saw that with the market very much over the past few weeks. So good stuff there. Let's uh, let's move on. What the Fed just happened. Speaking of sticky inflation, the committee sees more uncertainty about the path of inflation and now sees the risks weighted to the upside versus broadly balanced in September. Do you have any thoughts about, you know, with inflation, everything with the cut going on? Like what are your biggest thoughts with it, Shy?
So I think the biggest like whoa yesterday was Powell raising their like expectation for inflation from 2.1% to 2.5. That's a massive jump. So that's showing that inflation is way stickier than that the committee anticipated. And I think that's causing the higher for longer interest rate environment where you're seeing their expectations of inflation is going to be like chilling here a lot longer. They're not renting, they're owning the space a bit more than they thought. And you don't cut rates into that kind of environment because that could cause inflation to skyrocket even more if rates get cut. So they're fine line right now. The Fed, I don't envy their job. Like the macro data is really strong. GDP growth is really strong. However, markets' expectation is them to continue their rate cut journey at a really aggressive rate when really the data isn't showing them that they have to. And now the market's re-rating on only at 50 basis cuts next year when I thought it was going to be 100. So I think them seeing their inflation expectation from 2.1 to 2.5 is everything you need to know on why the market sold off yesterday and what the game plan is for the Fed in 2025. It's going to be waiting on data, and honestly, like, we're not getting any clear data signs that they should cut rates. And I think we're entering an environment now where bad news, macro data news, is going to be good news for the market. We're going back to that stage. So GDP strength showing strength this morning. Jobless claims is underestimates. I do think the market's like up pre-market. I think that's mainly because of dead cat bounce yesterday, but this morning's macro isn't good for the market. And I think entering like 2025, that's going to be the theme. Bad macro data is going to be good for the market. Good macro data is going to be bad for the market.
Yeah, so generally this GDP print would be good for the market. So you're anticipating it might be the opposite here. I
I
like it.
think we might get a fade
I like it. I
today.
well, I, that kind of goes in line with what I'm thinking on the charts. And actually, I was talking to Paper Danes, and he's kind of thinking that we might be in for a little bit of a GDP pop into the like PC sell-off type of thing. But I don't know. We'll see. I have no idea, but we're gonna
I,
we're gonna
I
find out.
do
Again,
think
market's
SPY's going to
strong
hit
right now.
550. I do think SPY's going to hit 550 before it hits new all-time highs. That's like where my
Hey,
gut's showing right now.
talked about them NFP levels, man. It's NFP to NFP now. We're halfway there on SPY, and I have it at 575.55. That's my next spot. I would love to see that happen, but again, it's not going to happen in one day. Even though we got fairly close yesterday in one day, but I don't anticipate that this goes in a straight line down there. We'll get some bounces in between, and like we are seeing right now, but yeah, just crazy seeing those levels play out. Micron earnings missed the mark. I know they had some poor guidance, and did they miss on revenue or was it EPS? Shy.
Both substantially.
Oh, on both.
So
Oof.
like their revenue they did meet their expectations for Q1, which is what their earnings report they reported. However, Q2 fell like sharply short of consensus. Like I think EPS estimates were like around $2. They came in at 143. I think their revenue expectation was 9 billion. They came in like under 8. So this was a massive, massive miss on the guide. And also their free cash flow they reported was only 112 million. So like that's pretty minimal. And I do think I read it into the report because Micron is one of those names where memory is going to be a highly important component of the Blackwell chips that are about to get ramped up. However, the jury's still out there if memory is a commodity and if there's too many competitors in that space for Micron to really thrive. But really, their guidance was just due to demand softness in like consumer electrics, PCs, automotive, industrial sectors. Like they were all massively weak, and I think that compounded to the sluggishness in the NAND segment. However, half glass full, their data center demand was like really strong. So like I do think that wasn't enough to buck the weakness across all the other segments. However, the data center is like the AI exposure that Micron does have, and that was showing a lot of strength. So I think hopefully the other segments does improve, and then the AI is gonna be still strong, and that could be the perfect storm for like Micron to substantially benefit. However, their other segments are incredibly weak. And I do think that the Micron's weak guide is a broad implication of semiconductor equipment providers are going to show weakness in the near term, because like that reduced capex plan is going to soften demand for like Lam Research, KLAC, somewhat ASML, but not really ASML, but like that manufacturing equipments for semiconductors, like that bucket is going to probably suffer in near term, and that's something to watch out for. Like there's just clearly a disconnect between like the optimism in data centers versus the challenges in other verticals that Micron has, and like I think there's just too much noise and it's too messy. And Micron's one that's technically breaking down, looks very undervalued, but I think these headwinds are going to be there until they report the next earnings.
Yeah, good stuff. Some other noteworthy pops and drops we had AMD, which I think we've been calling in my stream personally the advanced money destroyer lately. I feel like that's been fitting lately with the nasty moves we've
RIP,
seen.
RIP.
But now it's the whole market. So I mean, we got Polyrise on up 210%. Biotech, Shai's been talking about it, guys. Biotech name's getting some heat. I don't know if you were aware of this name specifically, Shai. Probably.
There's just so many.
There's
Every
so
day now,
many.
small
Yeah,
cap
there's a
biotech,
ton.
yeah.
There's always one popping, but always keeping your eye around there. The Biotech announced a manufacturing agreement with Eurofins CDMO. I'm not even gonna try and say that. To be completely honest with you, Shai, I'm not even gonna try and say that. A prominent European good manufacturing practice, GMP manufacturer. Interesting there. Heiko Corp down 9%. Oklo down 3% here. Viking Therapeutics, again, more therapeutic names. We've talked about that. There's always one popping up on these little charts that we have here. So again, it's just interesting seeing there's a lot of money flowing around those therapeutic names still in biotech. Jabil plus 7%. Parazero Tech up 39%. Quantum computing, again, quantum space. Those stocks are just continued to do well. Up 45%. CommScope Holdings plus 9%. So doing good there. Any more thoughts on quantum stuff going on?
Yeah. So quantum computing, I think the ticker's QUBT.
Mm-hmm.
That's not a real quantum play, in my opinion. It is not scalable. It's like one of those.
It's just the short-term trading vehicle.
Exactly. It's like Lucid versus Tesla. Like
that's
Lucid's
what I've
never
seen
gonna
with like
make it.
QBTS. I think it is as well. Those are more just like the trading vehicles right now.
But I did start a position in one of these names on this list on my small cap portfolio, and that is Viking Therapeutic. I started a big position in my small cap on that name. This dip yesterday is purely because of, I think, frustration from a lot of shareholders, or maybe it's an increased competitor that's going to be in that GLP-1 space. But like this, Merck decided to acquire this Chinese GLP-1 company for like $150 million, which is like a dumb investment when they could probably do. Viking is the best of breed in the GLP-1 data space in NASH. Like they have the best data right now, and that's tier one of that theme. And I think it's inevitable that it's going to get acquired. But Vikings struggled yesterday substantially because you're seeing these big pharma names acquire competitors at way less valuation. That's making the odds of them getting acquired less and less if these big pharma names are trying to get everyone else. But also that could be that's half glass empty. Half glass full could be Viking Therapeutic Management is so confident in their data that once it gets to full completion, they don't want to really sell out until then. So maybe that's why I'm buying into this weakness. I do think Viking Therapeutic will get acquired for $100 plus in the next 2 years. And when it was trading at $38 yesterday, I'm like, I'm starting a 5+% position in my small cap portfolio. This is a no-brainer for me. So I did start there. And AMD, new 52-week low yesterday. Like that's crazy to me that it's just not catching a bid. And that's another name that looks undervalued, but it has an NVIDIA problem. And now it's not just an NVIDIA problem. It has a Broadcom problem where custom silicon chips are going to be made for big tech. And it's just becoming a very messy situation. And that's something like AMD technically looks awful fundamentally. It looks intriguing, but like there's too much noise. And it's like a watch and see what they're going to do going forward type of approach. Oh, Jordan, you're on mute.
Thank you, sir. Somebody in the chat was asking about Jamia, though, if you're still bullish on that.
Oh, Absolutely. It's just one of those names that it's not going to really come to play until 2026, probably. But also, like what I just mentioned, strong dollar, that's going to destroy Jumia's earnings because they have a massive FX headwind issue. And the African currency is a no bueno situation. And the dollar surging is going to make the top line, like the headline numbers, even wonkier. I use constant currency to value Jumia, but again, like they really need to hit that break even quarter for the stock to really fly. But until then, like I'm I'm built my position. I'm just waiting and see. And however, the currency headwinds are a major issue right now for Jumia.
Yeah, moving on to the economic data for today. We talked a little bit about it, but GDP again came out up, looks like 10.7%, and then initial jobless claims as well came out down 4.35%, so lower than expected there. And now we got existing home sales at 10 o'clock Eastern, so something to watch out there. You should see some volatility in the market on, your normal names, NQ, ES, SPY, QQQ. You should see some
Whoa.
movement right into there. So keep an eye on that. What's up? You see something?
Yeah,
What
freaking
happened?
A. Hims is down 16% pre-market
Ooh.
after FDA decision on their injection shortage has been resolved. And now it's just getting destroyed. It's down
Ooh.
24% in
And
in
there's a
two
smile
days.
on Shy's face because
I knew
he
it.
is bearish.
I am. It's one of those names I just don't stay away from.
Yep. No, it's awesome. Love to see it. Just taking a look at some of the pre-market earnings we have this morning. Fuel Cell, Accenture, ACN. I forget how to say that company. CarMax, Darden Restaurants, ConAgra Brands, Paychex, Cintas, Lamb Weston Holdings, FactSet Research Systems, and then after hours today we got BlackBerry, one of the Mimi names, Nike, FedEx, and Scholastic. So still some earnings going on. Nothing too exciting in that area. I guess Nike and FedEx will be like the most interesting ones. So we'll keep an eye on that. But really, the big dog this week was MU, and we already talked a bit about how that went. So good stuff there. Still some earnings to watch out for. Oh, Celsius. I haven't seen this name in a minute. I haven't really been watching it too much, but I know she's been trying to hold up some support and make a little bit of a base. And you can see here on this chart, we have some trend lines going when we are holding right now. So I would like to see this hold. I did have a long-term position in this. I did end up selling it and taking an L on it for the year, but I am looking to buy that back into the new year. So I will be looking at spots to get in on Celsius potentially. But what do you think about Celsius here, Shy? Because I know we were trading it, early on to the year. I made some great trades on it. I had a nice investment in it, but ended up taking an L on that into the end of the year here. So curious what you're thinking about this right now.
So Celsius is going through their biggest issue is they're going through a shuffle of investors. A lot of people got into Celsius earlier in the year thinking it's this hypergrowth company that's dominating the energy functional energy drink arena. It's going to be the next monster. It's going to grow 50% this year after growing triple digits past 2 years. It's going to grow 40% next year, etc. That is not the situation. I think we got some color on how much Pepsi was accelerating Celsius's growth. As soon as Pepsi turned that faucet off, you saw the struggles Celsius experience, and they had a massive shelving issue that they're finally getting over. So I think that transition from investors getting into Celsius as a growth stock now is transitioning towards, instead of being a hyper growth investors, it's going to be an earnings growth story, and it's going to be all in their international expansion. I do think under $30 is kind of a great opportunity for Celsius. I comparing it against Monster Energy Drink, the valuation for Celsius should be $40. So I do think there's a 20 to 25% opportunity here. And that's why I do think this is one of my favorite names in January, where it can significantly outperform the market. Because I do think there's a lot of cap gains. This is a tax loss harvesting candidate because a lot of people are holding the bag on this name for getting into it way too late. And that's going to come to play in January of those kind of names are going to run, in my opinion. So I do think I have a trade on Celsius right now. I have 400 shares. I do have a stop loss around $24, $25. I do think it's going to go up to at least the mid 30s, but fair value is closer to $40.
Yep, I like to see. I'm gonna be one of those people going into the new year and buying that up, like you're saying. Maybe see some of that January effect. So we will we will see. Uber, something I've been watching lately. I don't haven't really traded it, and I actually did sell my long term position this year. Took some gains on it, did well, threw it into Tesla, and I'm happy with that position. But things are trying to reclaim this uptrend here. I'm gonna take a look at my chart as well. But let's see here. Yeah, I mean we're testing the bottom of this daily range. We're holding these NFP levels, which is big for me. These August NFP levels, and as long as we're holding that area, I'm fine with us testing down here on Uber, in my opinion. And I do think there's opportunity from these lows, especially. I mean, Uber's just gotten slammed over the past few weeks, month or so. And I know there's a lot of talk. Even me, I don't own Uber anymore because I believe more in Tesla, but it's not like Uber is going to go away overnight, and it's not going to become obsolete just in one day. You know what I mean? Just because Tesla is now ripping and things are going crazy, and yeah, Elon's in office the next 4 years with Trump, and they're all buddied up and everything, but still think there's opportunity for Uber and for the upside. For the short term, at least, right? I don't want to be really long term invested in it personally. Doesn't mean there's not a trade in there. I'm not going to be invested in it for the long term, but I do think there's opportunity for some short term bounces out of this area. Hold this low we've already made from August. I would like to see us hold that and maybe make some sort of higher low here and hold that bullish market structure. But yeah, that's kind of my thoughts there on the chart. Any thoughts from you, Shai?
I actually have an Uber trade as well.
Oh yeah,
Stop loss is 60 or $59. Yeah, I think this market's a forward-looking mechanism. I am bearish on Uber long term. I do think they're highly vulnerable to disruption due to not owning any proprietary technology and IP, and I think that's an absolute necessity in the post AI world because you can create a lot of products that are duplicated if you don't have those two things. And network being a network isn't enough anymore. The network effect modes. So, however, that's going to occur like in 2028, 2027. Like this is not going to occur anytime next 6 to 12 months. So I do think that this is one of those stories where the FUD is real, but it's not as aggressive as what the stock price may indicate. And it's going to be like one of those things where the earnings, they're going to show their earnings like, wow, they're not feeling any kind of dent like that with Waymo in San Francisco or FSC has no rides yet. Waymo has thousands of rides. Uber does millions of rides. It's not going to put a dent in their business anytime soon. And because of that, I do think they're going to go through a re-rating because they are undervalued right now. However, my short-term bullish, long-term bearish type of situation, and I do think this is it's gonna be like one of those bounces to $75. So that's why I do have a trade in Uber right now, and I have a trade in Celsius. Those are my two, and Viking. I started a long-term position in Viking, but like I did do some little ads this week. So Uber's one I'm kind of bullish on in short term, but stop loss is $59.
yeah, good stuff there. Good stuff. Coinbase eyeing that $50 moving average. I have been watching Coinbase pretty closely. That consolidation is just rough. I think we had 36, 37 days straight of just sideways in that range. So that was tough to watch, but now we're breaking out of that to the downside, going to test that 50-day moving average. So I know Shai is probably keeping an eye on that. Makes sense to me. Completely makes sense to me. So I'm keeping an eye on this for shorter term swing trades going into the new year personally, just because this is one of my favorite tickers to actually swing trade the options on. But other than that, I mean, I don't have any action that I'm taking off of this because I'm really thinking to the long side for the most part, especially if I'm buying time on any trades and really trying to catch a bigger swing trade. I'm not really thinking to the short side. So I'm personally going to be waiting for some sort of bullish setup. Maybe we end up getting that off the 50-day moving average. That's not going to be my only source of confluence, but I could definitely see us going down and testing that and maybe grabbing some bids down there. So we'll see what happens with that. Let me take a look at my chart, see if I have any big spots I'm watching. Yeah, so we came right down to the previous range lows, basically. And, a lot of momentum yesterday, but no real break of the range. We got a bit of a break of the structure, though, right? So that's maybe a little bit of a hint. We were making higher lows, and we did break that structure from that consolidation. So I won't be surprised if we see lower. Maybe go test those NFP levels I have. July NFP high, 225.10. I would love to see a move into that, especially since we see pretty much the whole market doing what I want with those NFP levels. And, SPY, I think, was $30 away from hitting that July NFP, which, a few days ago when I was mentioning that, it probably seemed crazy to think SPY could even get close to down there, right? And now we're on track for going down there. And again, it doesn't mean it's going to happen in one day. We're going to get some short-term bounces before we get all the way down there, in my opinion. Oh, there's that bell. Let's go. Market is open, baby. But yeah, Coinbase, watching closely. Keeping eyes on it. I do have it in a competition portfolio, but I don't hold it in any of like my main portfolios. We're doing a competition for this last quarter of trading, and I have it in there, but I don't have it in any actual trades on my real accounts at the moment. So, but what we looking at the open, Shy?
I'm
What are you keeping an
I'm
eye on?
I am watching SPY and QQQ on the dot. They just have not really moved. Um,
Yeah, I don't
I'm
really have
also
any actionable setups that I'm looking at right now. For futures personally, I need to see something else than what we're seeing in pre-market. We're just trading in the middle basically right now, and I don't want anything to do with this quite yet.
so that
I need some
Micron
clear
dip.
price action.
Micron is fading a bit at the open, down 15%. That's something I'm monitoring for sure. I think it hits $84 is like the next bottom on the stock. Wow, SPY and Qs are rallying a bit right now too. That's nice to see. Wow, TMDX is red. That's crazy. Jesus. This one is gonna
TMDX,
150.
yeah, dang.
That's look at that volume yesterday. That's wild. Um, wow, Palantir's up 5% now. Jeez, that's just one of those names getting bought up.
Somebody in the chat was wondering about ticker GRRR, Gorilla Technologies.
Grrr.
Grr. I like that name. That's funny. This thing's been ripping. I've never seen this
I've never
ticker
seen it either.
personally. Engages in provision of video intelligence, internet things, security, edge, AI, data analytics. Okay, interesting. $12. Well, the momentum here, just from a trading perspective and more technical analysis perspective, has been ripping. Probably off some sort of catalyst. I know they just had earnings kind of recently in November there. So I'm sure that's playing a role in that. I don't know exactly what's going on with the company, but a lot of momentum clearly happening right now. So I would say continue to ride that momentum until everybody stops dancing, which for me would be a change in what's been happening every day pretty much, and I wouldn't really want to see continued closes under previous day lows. Basically, that's what I'd be looking for, because you see the momentum on this stock and the way we've been ripping. It hasn't really let that happen, and if it has, it's gotten quickly bought up, and the candles have been fairly small to the downside. So that's what I'd be watching for if I was looking to continue to ride this. I definitely wouldn't be entering anything up here, but if I was looking to kind of ride this and I was already long, that's what I'd be waiting for, like a sharp close under previous day lows with like momentum, kind of signaling, hey, like it might be time to stop dancing and go go take my money and leave. So that's my thoughts there. Never traded it though. Don't really know the company. So
This is nutty.
High Tide. I'll take a look at that as well. HITI.
I've seen this name a lot on Finsway. I've not dug
High Tide.
into it. Yeah.
It's been looks like it's been doing good. Another kind of similar looking to that other name, Gur. Right now we're retesting November NFP high at 294. Also retesting October highs, and we're holding that. So I think this dip does look constructive if we can hold that general area. But there's nothing saying we can't come down maybe more towards the bottom of the range, which would be like that 260, right? But looks like there's buyers off this $3 area, which is basically those October highs. I would look for momentum off that and then move back up towards December NFP low, which is 329. So this has a little bit more of like a now buying opportunity for me versus the other name. But again, like these are not tickers that I personally would be trading. But this definitely looks better, I think. And a little bit more of a buying opportunity on this dip as long as you're holding these highs. So interesting there. Let's see.
Palantir is now
NVO.
up 6%. Jeez, this one's running.
Yeah, so like you said, we're getting that bit of a like dead cat bounce from dropping so heavily. I mean, you drop 1,000 points, you expect a little bit of a bounce at the next morning open. But I anticipate it's probably some sort of bounce for us to continue sell off. Um, for the longs, I would like to actually see us go lower. If you've ever heard the term, we need to go lower before we go higher. For me, for my system. That's what I need to see, right? I can't really take any trades right now with conviction and have confidence if we don't go and test yesterday's lows, because we're just stuck in the middle and there's been no big orders filled in these areas, no real manipulation on the higher time frames. So I just don't have
Well, I think yesterday
entries.
you just got the sign of how fragile this market is right now and how
Yeah.
overextended it is. Where it's not going to take much to really have one of the worst days in years
Yeah.
in one
That
afternoon.
was yesterday was literally that was the worst day we had since I think it was July 24th. Um
The yen
and
carry trade crisis, I think, it was like the worst since then. Like,
yeah,
and the
and I'd
volume was there
argue,
too.
with it happening in an hour, 2 hours, that was probably the worst, like, 2 hour close we've seen, and maybe a little bit longer than that. So, yeah, it was nasty. We haven't seen that price action in a minute, man. It was nice. I wasn't like sitting there watching it right then and there, but I did go like back and replay the movement like in real time and just watch it. I was like, wow, that was just brutal move down. So congrats to anybody that caught it. I personally, even looking back, there wasn't much opportunity for me to actually trade that, even seeing that move down. There was no real tell for me, but of course, if you manage to take the risk and get a position on and you banked it, congrats, because that was just a fast, big move to the close there. I mean, that can be life changing money. 1,000 points on NQ is just ridiculous. Much less if you have a ton of contracts on. So
So it looks like there's a fade happening right now in tech. SPY is holding up strong, but I'm looking. Some software names are red right now. Even Celsius is red. Qs are only up 0.6%. They were just up 1%. So like there is this dead count balance looks a little light,
yeah, I
and it
want to see
looks
this
like we
market
might
go
want.
hit those lows from yesterday for sure. Then I
Jeez.
can maybe look to take some action today, but if we can't do that, I'm gonna be kicking back, hands off, probably for the most part.
Yeah, I mean, this looks like a tricky market that I just don't want to.
Overall, coming into today, I would actually be overall a little more like bearish, but again, not at these areas. Like we need a bigger bounce for me to be really bearish, and we need a move down for me to actually be any sort of bullish here. So that's when I don't have an edge right now. I'm not going to participate, right? So a lot of time, like we don't like when we show up to the market and you don't know what's going on, but like that's okay. That just means it's time to stay hands off, because there's times when I come to the market, like yesterday, I came into the market and market open, and I had I saw everything I wanted to see. Everything, the market was basically screaming at me, telling me to get in my position. Where if I have to try and look for the market to whisper to me to get in, you know what I mean? I hope
Mm-hmm.
people kind of understand what I'm saying there. It's like, let the market really tell you that, hey, like your system is in place here. It's time to go. And for me, I'm just not seeing that right now. And I think that's the hardest thing for a lot of specifically intraday traders and swing traders is just, when you don't have that edge, not doing anything. That's kind of like the hardest work a trader has, is not doing anything, because that's what
But
saves us the most money. You know what I mean?
I mean, it's like going to a casino right now with your buddies and just not gambling. Like you just feel like I'm here. I see
Yeah,
everyone else doing stuff. Like I'm not going to participate because like I know my risk barriers, and
yeah.
it's just like that uneasy feeling that right now I have in the market as well as Jordan. Like where there's volatility in the market, but like I just don't feel like there's a floor for me to make any decisions on right now.
Again, there's a difference between opportunity in the market and opportunity for me to make money personally. So like yesterday, I had a long trade earlier in the morning. I don't care how much we dropped. I don't care how much money could have been made. The trade I had was 1,000 times better than any short that I could have taken yesterday, back half of the day. Why? Because it was extremely clear. It was extremely clear. Everything I wanted to see was happening right in front of me. My plan was telling me very clearly, hey, it's time to go, right? Gas pedal on. Whereas that short, I can look back and tell you, there was no way there was a clear entry for me personally. Maybe for you guys, right? Everybody has a different system. I understand that. But for me personally, there was nowhere that was actually telling me, hey, like this is super clear. This is what you're like. This is you're seeing everything you want to see. Get in here, right? That was not how it was yesterday. And of course, you can make that decision yourself on whether or not you want to take the risk to trade something like that. But for me, it's just like that's going against what I know works, and I just don't want to do that. So in that case, it just doesn't matter. We tank 1,000 points. I have people DMing me. They're like, "Oh, you mad you missed out?" I'm like, "No, I'm happy. I made great money yesterday. I have no reason to feel like I missed out. I beat the market. What is there to miss out? I didn't miss out on anything. You know what I mean? Right? So for me, it's just like changing that mindset. We a lot of the time we look at the candlesticks and just look at it as, oh my god, money I could have made. I could have done this. I could have done that. And that to me is just the retail mindset that keeps us from succeeding, right? And got to throw that out the window and see, okay, there might be opportunity in this market. Is there opportunity for me to actually make money and play my plan and execute on that plan correctly, right? If there's not, I don't care how much we move. It's irrelevant to me. And having that and being able to not care is so difficult, but I mean, it's something I've worked on for a long time now. And I think that's something that can really help new investors and traders. You gotta make that switch in the mindset, which again, I'm not saying it's easy, but gotta make it happen, or else we're just trading on emotions and trading for money when we should be trading to improve as a trader, right? And it's funny
Mhm.
how money will fall in your lap if you focus on improving as a trader rather than focusing on the money. It sounds kind of counterintuitive, but it's very interesting how that works. So something to think about into the market open and after yesterday. And especially too, if you had a bad day yesterday, don't take what happened yesterday into today and try and revenge trade or anything. It's a new day. There's new opportunities. Just play the price action in front of you. Let the market tell you what's going on for your plan. Oh yeah, Shy, I know you got a video. You got a video on the Stock Twitch channel, right? Of your 5 stocks you're looking at for the new year.
Yeah, yeah, I do. I
Shout
do.
out to that. Everybody should go check that out. There's a ton of great videos on the Stock Twitch channel as well. But everybody should check out the most recent video with Shy on there, just sharing some of the big names he's watching going into the new year. I think that could be really beneficial, especially we just talked about new investors coming in, new traders. That could be a great video for you guys to go check out going into the new year, right? A lot of people are thinking, well, SPY's been up all year, everything's ripping. What do I buy going into 2025? Right? Shy gave you a list of it, so go check that out. That is sitting on the YouTube there. Anything you're watching now? I think this dip just got bought up. I'm not. I
Did you
can't
see?
touch it. I just can't. I got
I
nothing
can't
here.
touch it, but Hims just got bought up big time. It's only down
Oh, they're buying
3%.
it.
Big time. And crypto stocks are roaring right now. I think this Bitcoin back above 102K. So you're seeing Coinbase up 5%. You're seeing HUD up like 3 or 4% as well. Um,
Hey, shout out reflections in the chat. Let's go. Good stuff.
let's see what else. Yeah, I mean, also like the Latin America kingpins. Like the if you guys want LATAM exposure, it's only two names, in my opinion, that you need to buy. Nothing else. Nubank and Mercado Libre. They've been struggling the past couple weeks because of this. I don't know, there's new macro news that got dropped recently where Brazil's essentially going to like announce they announced this like $12 billion spending cut that's going to occur in the next 2 years, and they paired that with a hike on the wealthy, and they made some exceptions for lower income citizens. Like this is obviously a not a great situation for um, Mercado Libre and Nubank, because especially Nubank, it affects the credit as well. If they're like helping, it's a very messy situation. It looks like this macro headwind's not going to be like a flip of a switch. It's going to be a sticky, reoccurring issue. So you're seeing Nubank be way oversold, and you're seeing Mercado Libre show a lot of weakness as well today. So like I do think that's an area of potential bounce spots on too much FUD, and I'm watching right now. Like Nubank is red as well, and it's just one of those high quality names that are just experiencing a short term bump that I think is going to be like short lived. We'll see.
Yes, we will. How's Tesla this morning? Taking a little hit? Yeah. Again, don't mind that. I talked about this a little bit. I mean, when you rip to 480 as quick as we did, 490 basically, you you gotta expect a bit of a dip. And I mean, this thing could come all the way back down to 400, even lower, and I'm like, cool, thumbs up. Don't care, totally fine. Nothing bad about that in my opinion. Of course, if we see some big bearish catalysts coming in that are maybe freaking people out, that's when we can make different decisions there. But for me, I mean, any downside we're seeing right now, I just don't care about unless it's a real issue that has a catalyst with it. And any little short-term bearish headways that I've seen come out recently with Tesla, again, like I just said, they're short-term bearish headways. They're not this big long-term thing to worry about, in my opinion. Any of the news that I've seen recently, so all good for Tesla. Let her dip. She needs to come in, breathe a little bit. Things do not go in a straight line forever, as much as it feels like it when we're ripping like that, right? But things need to breathe, right, and take a little break. And I think that's what we're seeing right now at Tesla a bit, especially because, yeah, we dropped pretty decently yesterday, but relative to the market, it did not drop that much at all. We barely got below. I mean, we closed below the previous day low by $20 or so. Yeah, I think it was, yeah, like $20. That's nothing for Tesla. If you know Tesla, that's nothing for Tesla. So relative to how the market dropped, not a big drop there. Strength still holding. I'm not worried about it at all. Coinbase though, need to look at that. Holding yesterday's lows. If we hold yesterday's lows, things are still in line, but I'm concerned here, at least for the
It,
short term.
like SPY needs to hold this 591 level. Like this is a massive level for them. It's a 50-day SMA. It's anytime we've like the market's feeling fading right now, it's kind of bouncing at that level. I think that is my indicator on if there's going to be more near-term weakness is if SPY can hold 591 because the way the market's been rallying, that the 200-day SMA on SPY has been like untouchable since November 2023. Like we haven't retested that level since over a year ago. That's unhealthy. You're supposed to theoretically test that level once a year at least, like multiple times. Right now, it's just so overextended. Where like if we violate this 50 SMA and we do it again with volume, that's worrisome because the 200-day SMA, you know what level that is? Interesting, 550. So that's why I'm telling you
Yep.
that 550 feels like a magnet for SPY eventually, and you kind of want that. Like you want that. Yesterday's flush was absolutely healthy for the longevity of this bull market rally. However, like I don't think yesterday was an actual test. I think that was a gut punch. The test would be if we break through all these major technical levels and we slice through to the 550, do we bounce from there? And I know like that's the market going down another 8%, 7 to 8% is like what? That would be nuts. Do we be in correction territory? That's what occurred in July or August. Like that yen carry trade crisis, we corrected ourselves 10%. And guess what we did? That was our first major test of the year. We aced it. And now we just like went roaring for the next couple months. We kind of need that again. I really do. And I do think I want more pain. I do think we need more pain. And I think that the Q is going down over 3% yesterday, and it's only the dead count balance is 0.6%. Tells you everything I think you need to know in the near term. Like I think we fade more. I really do think so. And until I see otherwise, like SPY right now, it just broke the 591 level. So like this is big. If it can like go back above it, it's hovering there now. It's sticking. So be cautious out there. Again, like we have PC coming tomorrow. I think that's going to be a big indicator. I think we're in an environment where bad news is good news for the markets. Bad macro data news is good news for the market. Good macro data news is bad for the market. So it's going to be like one of those like left brain, right brain situations. Like, oh, positive data. Does that mean good macro is good for market? It's going to be wonky. But look out for these key levels. Show what's showing strength, what's showing weakness, even on days like today. But right now, I don't know. I'm not confident at all.
No, sir. No edge. No trades for me. But still gonna have fun watching the market and always keep my eyes peeled. Because just because there's not something right now doesn't mean in an hour we might not have a setup. For me personally, right? I know you're definitely more on the longer term stuff. But for me on the day trader side of things, I might get something later. So I'm gonna keep my eyes on things, but not jumping at anything right now until I see something I really like. So I do hope everybody has a safe day trading. Again, don't take what may happen to you, or what may have happened to you yesterday into today's trading. Just a new day, new rules, right? New plan, and just execute on your plan, man. Again, I see so many people focusing on trying to make money over and over, and they never make a dime, right? And you focus on perfecting your plan, executing correctly. No matter win or loss, doesn't matter. Like, let me play my plan correctly and execute on what I know and what I follow, right? And money ends up falling in your lap, right? Of course, you need to have a strategy that actually works, right? But that's where the money comes from, is not actually thinking about the money, right? Actually thinking about improving as a trader, right? Hitting your targets, having proper risk to reward, all the things that you guys have probably heard 1,000 times, but a lot of people don't like to implement it, right? It's just that is what can keep you from doing well. Is just thinking about that money too much, because that's emotion, right? So I would do your best to stay away from that, and just trade the plan that and execute as best you can, honestly. So everybody trade safe. I think we're gonna wrap it up coming into the hour here,
I
unless you
think we're
got
gonna
anything
finish
else.
red in the market. Like I really,
Ooh.
dude. Spy's about to break
Shy's
590.
bearish.
Spy's about to break 590 now. Like it's way below 591. So like, be cautious out there. Like I'm not gonna participate because of what's the VIX at right now.
2135.
Yeah, I don't like buying puts when it's above 20. So I'm just chilling, but I'm not using my capital at all right now. At all.
I'm with you. Well, everybody have a great day trading. Again, stay safe, play your plan, and we'll see everybody back bright and early in the morning. I think Shy is gonna be off, but I will be here with the Friday crew. So make sure you guys are tuning into that. And if you're here, make sure you guys are subbing to the channel, liking up the stream if you're enjoying the morning show every morning. And yeah, trade safe, guys. We'll see you bright and early in the morning for FAFO Friday. Enjoy the day.